Alright boys, big night, big night. Now, the market's actually been waiting for this for a while now, pretty much all week. Given, apart from the BOE, RBA, nothing really has been as eagerly anticipated, and a lot of pairs actually in holding patterns are waiting for this price action that's coming next. Now, the most important two pairs in play for the non-farm payrolls, and these are the ones that you definitely have to be watching no matter what pair you're going to be trading. It's going to be the dollar yen, okay, and it's going to be the euro. Alright, so the situation with the dollar yen is that we are under pressure. The US dollar's weak, yen is strong, disappointment from the BOJ is real, and we've fallen all the way back to 101 after rallying up to 107. Now, the timing of this full pullback is pretty bizarre, given that this day that we tested 100, this was last NFP. Okay, so if we go back in time, the price action on that day was incredible. You know, the market, it was a really good number, remember, it's 290. Market rallied, shot all the way back down, tested 100 in a whip, and then came back up. And then a couple of days later we get that big announcement, huge stimulus after the Japanese election, and then expectations of the BOJ doing something. Market rallied, a little bit of disappointment from the stimulus, a lot of disappointment from the BOJ, and also some weak US data at the same time. So we're right back where we started 1 month later. Alright, now the key level here is 100. So a weak number and a break of 100 will impact US dollar strength across the board, and it can't be stressed enough that that would be quite dramatic. I don't think it's going to be very easy for 100 to break. You know, the BOJ, big corporates in Japan, you know, they're probably going to have relatively large orders down here, and if it does hold, then this is where the whip can begin. So most non-farms has a reversal in it. Right? That's just the way the market tends to trade it. I'm talking like 60-70% of non-farms have new highs and then new lows made on the same day. If the 100 level holds, if it's a slightly weak number, say 50k less than expected, 130k, then 100 is probably going to be tested. It may not be enough to break it, and you might get a bounce above. Right? Especially if your visions are somewhat positive from last month or the month before. Okay, the market will look for an excuse. if it's a little bit worse than that, say under 100k, we might break 100. In that scenario, it is likely, in my opinion, that we don't get much of a rebound. Yeah, and that dollar weakness may be sustained, and its impact upon the euro is probably going to be new highs above that 112.30. Now, the important thing about that is that will change the whole picture here for the euro, and it will start to look like it's rallying, right? And once we get above that 112.50, 113, then the target of 115 becomes natural, and you got that final movement in the market, and you get momentum traders, you get tech traders jumping on, US dollar weakness continuing, and the euro has been sleepy, so it is waiting for a reason to go one way or the other. A really strong number is a little harder to trade. The market is not pricing in Fed rate hike in September, and one number today is probably unlikely to change that. Alright, but, and this is important, the market is short US dollars going into this. Alright, that means that the reaction to the top side can be larger. Alright, so the dollar yen reaction I'm talking about here, maybe even all the way to 103 on a 250 number, or up to 300, 250 to 300. And I'm not suspecting that this will be held, these gains going forward, but just the short-term rally. Alright, and then from there you may get easing back next week. But the market movement, I suspect, will be larger to the top side today if it is anything close to what last month's was. Alright, so that sort of dollar strength, okay, would catch a few other pairs a little bit off guard. The euro really hasn't got that much rally set into it yet, so it's not really going to be that affected. But a couple of the other pairs have, right? In particular, the Australian dollar has been relentlessly well bought on dips. Alright, another way of saying that is relentlessly bid. Alright, but I don't want to use lingo that you may not know. It's been bought on nearly every dip, and even though that a pretty strong number is likely to provide another opportunity to go long Aussie, the size of the downside move here might surprise you just because of the positioning, right, and just because of the trailing stops of this particular pair. The other pair, and the more favoured pair to be playing this, is going to be the Kiwi dollar. Alright, the Kiwi dollar has an RBNZ rate announcement coming up, and the potential to slice through support on a strong US number is definitely very real here. Okay, so the way I'll be playing a strong number, apart from being long dollar yen, will be to be selling the Kiwi, and so I'll be looking at that as my main trade idea. And when we get to the live number in 10 minutes, I'll be looking through that as the potential. Okay, all right. So the Kiwi dollar and the Kiwi dollar, I think, comes into play a little bit easier on a neutral number. Alright, so a neutral number, say, comes in at 180, right, and it, the market may go down just a little bit, say 20-30 pips, and then bounce back up as the trend buyers buy that dip. I'm then going to be looking to sell the Kiwi dollar. That's my neutral number trade idea. And the main reason is that I suspect next week, Monday, Tuesday, and Wednesday, the Kiwi's going to have a hard time, because there's more and more rumours and rumblings from economists and RBNZ watchers, central bank watchers, that they're going to cut 0.5% next month. Okay, so next week. So the market will be forward looking next week. I want to get into that tonight. Any sort of news over the weekend from weekend papers can get some selling early next week. I just want to be short that. Okay, so on a neutral number, I'm looking at as the Kiwi to be short. On a very strong number, Kiwi short, dollar yen long. On a very weak number, I probably won't trade. Alright, on a very weak number, the pair which is going to do probably the sharpest move high is going to be the pound, because it's positioned the worst. but even that is going to be hard to see it being sustained. All right, but the pound itself could easily, on a very weak number, pop that 133. Even get to that pre-high levels of the BOE. Just because the US dollar weakness has been expressed on nearly every pair except for the pound, for good reason. But the market's very, very short the pound. All right, so let's keep that in the back of your mind about which pairs to be playing. All right, and just be very aware. There's two things that are very important when you're trading news announcements. I don't even recommend trading full sizes. I recommend trading quarter or half lot sizes if you trade one lot usually. And you'll notice something about my trades here. I don't have much exposure to the US dollar. Alright, only one pair that I was buying from the BOE yesterday, and I'm actually going to lower some of that exposure now. Okay, we don't want to be holding too much, long or short US dollars into this announcement, because it becomes a bit of a crapshoot. If the two recent numbers tell you anything, it's that this is going to be volatile. So the last two numbers have been 30k and 290k, when expectations have both been around about 200k. So big misses both sides. Alright, the other trades, just to quickly update before we go and check what the banks are suspecting going to happen and the way they're going to be playing this tonight, just so you can get a little bit of their preview. Little update there. The Aussie Kiwi's doing well. Remember, we want to be short the Kiwi. Just so happens we got in long after the RBA cut, so we've got a nice level here. The Euro Swiss, that's just range trading, and we got a nice range. We got a nice level, so we entered here, took profit, came back down, entered again. We'll be looking towards that 108.80 level. Alright, so that's my basic little pre-ramble here on the pound. Oh, sorry, on the NFP. We are going to try and trade a little bit live, but we're going to be using very small positions, so 0.25 of a lot. Alright, so this is FXWW chat room. This is where some bank traders hang out. They also post a lot of their data. First one we're going to look at is going to be the Goldman Sachs preview. Alright, so we've got 7 minutes. Then we're going to go back to watching the dollar yen and the euro and the pound as the main trades. But let's have a little look here. So I'll be back in 2 secs. I'm going to remove the camera, but I'm going to talk over the top. Alright, so they're expecting 190k. The ISM's been quite strong. Not too weak, and jobless claims have been quite strong. ADP report, remember, a couple of days ago was quite strong. So that's the justification for a quite strong number there. 190k makes it a little bit harder to trade because it's as expected, but short Kiwi dollar is the way I plan there. This is a cheat sheet that RBS puts out each month. RBS, Royal Bank of Scotland. RBS forecast 195. Look, another one so far has been out there, have they? Huge variance in the last two months here. So once again, they're looking at economic data and they're trying to extract from that what they expect to happen. Let's have a look at Citibank just quickly. We're not going to spend too much time on this, guys, just because it's we're getting close now. Citibank's main point up the top here is that no one's fearing a strong number, so a strong number is going to have the bigger reaction. I suspect this is the case as well, mainly also because of positioning here. Alright. Alright, so the way they're playing it is long dollar yen on 210k and potentially selling more the pound. City forecasting 170k. They don't expect much movement on that. Let's see if they have a below 150k what they want to do. Alright, so below 120k. Dollar yen breaks 100. And they suspect US dollar is going to fall further against euro and pound. I suspect that would be the case as well. Mediocre number 120. US dollar ends up a little bit lower. I think it's very dangerous to trade that number. A 120 to 160 will be a very whippy reaction in the market. Basically, as expectations, they suspect dollar yen will pop higher a little bit. And above 210k, they're expecting the yields in the US to pop higher and for a sharp rally in the dollar yen. And for the market to start pricing in September rate hike. That would be something which would have overflow into next week and help that US dollar to rally. Another reason to be short the Kiwi against the US dollar. Alright, just Deutsche Bank here. We're going to see if they have an expectation. No, they didn't put one out in that piece. Alright, so stock market's actually fairly high going into this. So their reaction is going to be important as well as to whether the dollar yen can break 100 on a weak number. Remember that what happens at dollar yen 100 is key here. We've got 2 minutes, guys. I'm a little suspect on any sort of rally here holding, so I'm going to just put a little take profit in on this euro yen, small trade that we're in. The Aussie Kiwi is not going to be affected, euro Swiss not too much, euro yen pound definitely, pound Kiwi not so much. People ask me if I can sell the Kiwi dollar on a weak, very weak number. It's not the game I want to play. Even though it makes sense, and it might be the best trade out there, it's not the one I want to play. Alright, boys. $20 seconds. Alright, must be strong. Dollar yen's having a nice little pop. Not aggressive though. $255k is above expectations. We're going to just check what the wage growth is. Surprisingly muted reaction here on dollar yen. Pound yen is probably dragging it down. Dollar yen's the way I want to play this. But it is giving dangerous signals that it's not going to be sustained. But let's just buy a little bit just to see how we go here. Earnings is a little less on the month-on-month. That's half the reason here that's not getting that push through. The revisions of last month are higher. I think net this is going to go higher, guys. So I'm happy to be long dollar yen. Stocks are also pushing up. But the price action is a little bit left a little bit slow. In regards of whether we get a whip here, that's going to be the key part, right? I suspect that 102 is going to get tested first. The pound looks like it's on the move down towards 130 now. Euro stops are pretty close here, around the 110.80 level. We're breaking those, can get the market following through. The dollar yen itself, though, has got those stops from the previous highs, only at 101.70. Alright, so some numbers are going to give that whip potential. I don't think this number is the sort of number that you're going to get that really big whip. But the lack of follow through is concerning. Easily could be a lot higher here on that dollar yen move, so I may not buy more here on a dip. I've got 1/4 lot trade. Side note, Canadian data was terrible, so the Canadian dollar must be getting wrecked here, and it is. So Canadian data being weak while the US data is strong does create that divergence there. So potentially it is going to be the best pair to be trading here on the short side. Much of that move though. I was not really watching the dollar CAD on that pair, on that release, but I am long dollar yen here. I think these stops are going to be popped soon. After that, we can make our decision what to do with the dollar yen trade. It's a little bit of a time-based trade. It's got to get to 102 in the next 15-20 minutes, right? Otherwise, the profit taking will come in and it will start to do, the chances of that whip, which is very common in non-farm payrolls, makes it a little bit too dangerous to remain long. It's definitely muted reaction here. But remember, the US dollar was positioned weak here. So there is a bigger chance of a sharp short covering. And then we find the selling on rallies of the US dollar, which is natural given that weak GDP number and also the pretty benign Fed. So yeah, many people are going to be using this rally in the dollar yen as an opportunity to get short. I suspect though they're going to be waiting for a little bit higher, at least above that previous high there. But it's definitely taking its time. noticeably slow. Pound's showing better follow through here. You know, the yen crosses are probably weighing a little bit on this dollar yen, but usually the dollar yen's reaction is the cleanest of all the pairs in the market to a strong number. Stops on the euro are very close here. You know, there's the problem here with the stock markets is a strong number is good generally for stock markets as long as it doesn't affect the chances of a rate hike. Then it's bad for stock markets. So it's a fine line, right? The market has to try and thread here on the stock market reaction. And that directly relates to the dollar yen a little bit as well. If we see some heavy selling coming through at the open of the US session in 50 minutes, then that will short circuit any dollar yen trade. A little bit concerned here that the market's not pushing higher. I might just close this out, guys, and then look to re-enter. It's taking too long to rally for my liking. Alright, I mean, it's every reason in the world for it to go higher, guys. So the fact that it's not high already makes me a little bit concerned. So that's why I get out of a trade, when I don't like the feeling of it. It may sound a little bit risk averse, and I mean, I'm generally that's the way I trade. Aussie Kiwi looks like it's extending higher. So in relation to the other trade that we're talking about, short Kiwi, oh wow, they are taking it to the cleaners. Okay, that's excellent. I know a lot of my clients are short Kiwi, and they're praying that this had happened, and it is happening. But then again, we're not getting the follow through just yet either. So selling on rallies here is the main trade I'm going to be looking to do next, up towards around 71.80. I'll go in a little tighter here. Yeah, so I closed out that dollar yen. There was no follow through, but I am looking to buy dollar yen dips and sell Kiwi rallies now. Doc Weir, the US session opens, and what I mean by US session is the stock market opens in 50 minutes. An easy way to remember it is most of the US data is 1 hour before the open. Alright, so I mean, there's nothing really wrong at the moment remaining long US dollars. It's just the market has been quite eager to sell US dollar rallies. The fact the stock market's remaining quite strong though means perhaps we're going to be churning through some orders here. But it is taking its time, so that's not the price action that I like, and that's why I've closed out my dollar yen. But if you're remaining long, there's nothing to be too worried about just yet. Yeah, Doc, they're just general market hours that they're giving you there. There's no specific FX open time for the US session, right? There's Asian session, European session, US session, right? But it's just, sort of their subjective view. The stock market generally is what we're talking about when we're talking about the sessions, because it's the stock market which flows over to the Forex market. So that's why we want to know the impact. But in terms of when the US traders are at the computers, they're probably there already for the last 3 hours actually on an NFP day. A lot of them actually start early because the European session is a good session to trade anyway. And Asian traders definitely stay late for the open of the European session. That's probably the most commonly traded session for Asian traders. Is that for Australia's 3 to 8 o'clock session for Forex traders anyway. So like we got out of this dollar yen, it is starting to fade a little bit here. Hopefully the Kiwi dollar is giving us that nice level. All right, it's up to that level that we want. Just going to sell in here. I'm looking at the chat now, Osteo. What are we saying, mate? You're probably looking at a 15 to 20 second delay. You can't really get around that. That's just the way, because I'm streaming here and the market's going, it's going to a server, and that server is the YouTube server that's distributing it to all you guys, and that processing and uploading usually is taking 15 to 20 seconds. I haven't seen it much quicker than that. Unfortunately. There might be ways to lower that. I'll investigate, but I haven't looked into it just yet. Alright, so let's just check in here, see how Aussie Kiwi is going. Right now, the chances of a Kiwi kicking above that, making those new highs, is real on a non-farm day. It does wild, wacky things like that. But I am getting short here mainly before next week, so I'm not really interested in taking a loss here. I'm suspecting that there will be Kiwi weakness ahead. And so this is just a safer way of trading US dollar strength. But definitely can't rule out that we do a flip here and get to that 72, say 20 to 30. It does this sort of price reversals a lot during the non-farm payrolls. But I'm going to take that risk and just suspect that a normal sort of retracement that we've got already is going to be about it. And I'm going to be holding this into the next week, guys. So, in terms of what I was talking about with the RBNZ as well, we'll just finish up on this. So there is a few economists and market watchers now starting to talk about the 50 basis point cut. All right, so the ability for the central bank to get away with it is increasing. So that shock and awe move that would really break the Kiwi dollar, that's something that they might consider doing early. And the fact they held a special meeting halfway through the month to update the market suggests to me that it is possible. I don't think it's likely though. Yeah, market's currently only putting in a 14% chance. Right, but the more you get this sort of article, the more the market will sell the Kiwi before the RBNZ. And also, if you just want to check your technicals, if you haven't checked them for a while, this is a nice little technical update chart from Danske Bank. Gold on the 15-minute chart. What's going on in gold there, Hans? Guessing it got smashed and you bought it? I know how you trade, mate. I know how you trade. Alright, where'd you buy, Hans? Do I have to go check your MyFX book? What did you do? Hans is a big signal here, guys. Gold Star, if you don't know who he is. He wants me to go check. Hey, what do you want me to do? Hijack this as a Gold Star special? You're selling it again. So you bought, you sold, you bought, and now you're selling again? Is that the summary of this? You killer. You King of Maine, you Knights of New England. Get in there. No, I'm selling the Kiwi, I don't trade gold. Gold's killed enough of my clients, killed enough of my friends. You know, I am interested to see if Good Boy's trading this. Does anyone have access to Good Boy? Smart Forex is asking, why is dollar yen gone down? It's not so much our question to ask that, alright? But the reason I closed out that trade is that it wasn't going up. As crazy as that sounds. Sometimes you just got to read into the price action here and say it should be 100 points higher. It's only 50 points higher. After 5 minutes, that's enough time for me to get out of that trade. So that's the reason I closed that trade. Think about break even, and you know that's something you got to be aware of as well. You can't just make a plan and then not react to new data on the ground. Buying the dip is fine if you had bought back the dip. Probably is going to be fine if you just hold it here. You know, especially maybe next week in the Monday session in Japan, they looking for excuses to be buying. So, yeah, but the reason I closed out is that it wasn't shooting higher; it was stalling, and the other majors, being the euro at that 110.80 support and the pound, were also showing some signs of support. All right, but you know, I just didn't want to stick around for a big NFP whip. If it was something other than NFP, then I might stick around. But NFP, it's really common to have that reversal. But it looks like there's a second wave here of US dollar buying, so this is positive. If you remained long on dollar yen, you're probably going to be okay here. Just going to see if they get some follow through here on the euro. And for Gold star, we want to check how the gold is going. I think he's probably making money again. Gold's not moving too much just yet. But if the euro pops lower, then that US dollar strength might take this gold down next level. Actually, one of the mildest reactions to an NFP I've seen in a long time. Yeah, Osteo, the follow-throughs on the rally of the dollar yen in the last couple of days haven't been that well. So this here, but we have got higher. So I'd be putting it around about 101.85. Okay, just because it's not showing signs of strength. So 101.85 would be my target. And you hopefully want to be out within an hour of the US stock market opening. So in the next 2 hours, you want to be out of that trade. You can't relax, Sands. They want more from you, mate. You got to keep going. Give them what they want. This is Hands today. We're here for more movement than that, Russell Crowe. We're here for more movement than that. Yeah, I'm looking at your picture now, Hands. That's good, mate. That's excellent. Alright, good luck, guys. It's pretty late here for me. I've been working 6 AM shifts this week, so hopefully next week I'm working later. I'm going to have a bit more energy for you. I'm looking for a bit of US dollar strength to follow through on Monday. I suspect it's not going to last that long though, so just be a little cautious here. For it to last, you're going to have to see the September rate hike odds improve. You'll get that from looking at the short-term US bond market yields. And I'll give you an update on Monday as to how that's coming. So come in at 9 GMT. That's the normal time for this stream. We'll update you on how the markets progressed, for the US session.